KCC105 for the final graphic number 2. We need to talk about an investment. We need to predict how it changes in the future, which means we need a percentage change for right now. Let's figure out how to find those percentage changes. And in general, your final graphic is going to combine the efforts of these two graphics. I think this was 7 and this was weeks 5 and 6. You need to find a percentage change and then use that to predict in the future. So how do you find percentage changes? Well, first of all, figure out what you're interested in investing in. If you're investing in the stock market, say, or mutual funds, or commodities, hey, let's buy gold or silver or something like that. I've got the data in Yahoo Finance. If you say, I'm going to buy a house, Zillow data. Let me talk to you, make sure you understand how to do these. I'll start with the Zillow data. If you click this website here, you will get this kind of menu here. The home values is probably the number one that you're looking for right now. This is listings. That's if you're a real estate agent. No, we're talking about investing. What's my house worth? So if you click here, you'll see this big long list of stuff. Time series. Time series is what you want because you want to see how the price of the house has changed over time. And then, of course, you can pick a different geography. I already downloaded one, so let me just work you through the process. I picked the a time series. I believe this was a one-bedroom house. You can pick which one you want, and I can look at different cities. So if I pick Chicago, here's all the data for Chicago from 96, and it goes all the way up to the present day. I only did 5 years worth of it, to 2000. Okay, so how could I find the percentage change? Well, you need an index. So usually we do indexes going up and down, but right now my spreadsheet's going sideways. So I could label here, I could say this is my index. We know it starts with 100, and then from here, how does the formula work? Equals. You take the value of the house divided by the baseline value. I'm going to hit the F4 there, and I'm going to hit multiply 100. We've seen that formula before. Okay, 99, does that make sense? Yeah, because look at the house value went down for that first month. And I just pull it sideways through the end of mine. I only did 5 years. I say it's 124. Remember, you can find percentage change from that. How do I say it? Percentage change. Forgive the spelling. Let me get rid of that number. Percentage change. Well, this is my percentage here. Ooh, there we go. Nice and yellow. And it means my percentage change is 24.16%. Okay, but remember that's 24.6% over, what is that, 4 years. So you could say per year, it might be 24.16 divided by, what is that, 96 to 2000? Was that 4 years? So then we could say, hey, that's about a 6% change per year. Okay, so look at the calculations I did right here on the home value. I was able to do an index. We know how to do that. Come on, that's old hat to us by now. And then at the end of the index, then you had to do just find the index and do a little calculation, find the percentage change. Okay, how come that's important? Because, well, we're also, if you go to Yahoo Finance, if you can do the houses like I did, or you can go to Yahoo Finance and look right here, markets. In this markets, you have this big menu, lots of different investment options. You have cryptocurrency, well, Bitcoin. I'm going to make a recommendation you stay away from that because that's a little volatile. Bubble, as you might say. But currencies, if you want to invest in, say, let's buy money in the euro. Commodities, I'll click commodities. I'll just give you a little heads up. Commodities, hey, let me invest in different products on the market for different businesses in agriculture and so forth. Real quick, though, let's just check one. Okay, silver. So I click silver. What do they have here? And they have this. Okay, this is a daily, so it looks like it's doing great, but that's just 1 day. No, investment is 5 years. So I click the 5-year button. Whoa, look at that trend. It's kind of going down, if anything. So I'm going to leave it open to you. Find a commodity, go for it. But in general, you might find trouble with that. Mutual funds. This is a real interesting one. I click mutual funds, all sorts of different things. The difference between those, that's for you guys to explore. That's the point of this assignment. So I click Vanguard here. I think is one I picked. That's 1 day here, or that's 1 month. I go to 5 years. Ooh, that looks pretty good. This is pretty nice. We've done this before. You go to historical data. I got 5 years worth of data. Let's go monthly. You don't need it every single day. If you do that, then you can download the data and then do the index just like before. Okay? Do the index and then you can find the percentage change, find the percentage change per year, but that's a good recommendation for that. So mutual funds, you're probably going to find some positive performance. Commodities, go ahead and search. You can do stocks. I'm not saying you can't. You can do a crypto. You can try Bitcoin, but let's be honest, that's a bubble, which means you're not going to get a long-term gain. You'll be looking at, this year. So take that in mind. The last one I want to talk about is bond rates. So I'm going to click bond rates here. There's not so many because, well, the government doesn't have a huge array of different bonds. But if you go down to this 30-year, what if I buy money from the buy a bond from the government and wait for 30 years? If I go over here to historical data, you'll get this chart here. You say, wait a minute, there's not that nice little graph we saw for the stock. That's because bonds actually give you the rate of growth. So if I hit done here, and I can download this data. Okay, it's coming up here. So I open it, and watch what I need to do. Oh, I just got 1 month here. When you do bonds, if you need to find the rate of the percentage change, you don't have to do the index. All you need to do is do average. Type in average. I want to find the average value of the bond right there. It says 3%, so that's telling me the average growth of a bond is 3.14. How come? Because bonds don't behave like stocks. They don't go up and down. It's just the percentage that changes, and that percentage is what I'm looking at. So what have I gone through real quick in this video? I've gone through all these different ways that you can find investments that might grow over time and look at your money. You can find... where's my menu going? My menu disappeared. The options you got. Here we go. We got stocks. That's a good option. Commodities, you can try it out. You have currencies. You can try the US dollar, the euro, buy money in the yen in Japan if you would like. You can look at treasury bonds. You can look at mutual funds, which typically are going to be your best performance. You can try a couple of those and say, hey, compare stock to a mutual fund. There's a lot of different options you have here, but the main thing is to get data from this, find a percentage change, and then you'll compare it to inflation. Check the second video for that process.